Hello, friends. I'm sure you're all doing well, and I hope you're all ready for an enriching learning experience in the world of accountancy. I, Azad Purohit, welcome you to our accountancy lecture series. Before we start our classes, I need to ask you one question. Do you think accountancy is really a subject worth learning? Why I ask this question because if you do not know the importance of the subject, it would not be of any use to you in your practical life. So let me explain this, let me answer to this question by taking my own example. In my early days, I wanted to do something big in my life. I wanted to be either the owner of a business or wanted to become a CEO, CFO of an organization. In other words, I wanted to be a leader, not the follower. I wanted to be a decision maker in my life. So when I started with my career in the commerce subject or accountancy, in my first introductory class on accountancy, I discovered that accounting is the language of business. It's a language because it communicates the business results to the decision makers. To be a decision maker, you need to have the information. You also need to know the source of information. Know how to use the information for making better decisions. That was the day when I realized that accountancy would be a perfect subject for me. Now, that was my case. What if you are not interested in business or finance at all? What if you are an artist or a doctor or a lawyer or an engineer or any person from a profession not related to accounting and finance? Is accounting worth learning for you? Would be the question again. The answer would be a big yes to this. Let's see how. Say, for example, if you want to buy a house, what you do is buy a house. You need to take financial decisions as to whether you need to purchase it outright or you would be buying it on EMIs. Suppose if you want to buy a car, again the same question. You go to the car dealer. He says, would you like to buy this outright on outright purchase basis or in installments? You need to decide on something. Why do you need to decide? Because this has an implication on your tax outgo, isn't it? Similarly, if you want to make planning for your retirement plans, you want to make your retirement plans. What you do is you have some funds and you have to make a decision as to whether you need to invest these funds in shares or stock, in bonds, in mutual funds, or simply in the bank deposits, or you need to trade in commodities or any other financial instruments. Remember, if you are saving something, you need to beat the inflation. Your investment should at least be more than the inflation rate. Then only you would be saving something for your future. Right? So what happens is, be it taking a decision related to buying a car, a flat, a house, or making something for your retirement plans, you have to make some decisions which are related to finances or accountancy. What you do is you have only two options. The first one would be to rely on the brokers, wherein a large amount of risk is involved. Why? Because the broker is more interested in his brokerage rather than your returns. Right? So it has a greater element of risk. The second option for you would be to understand the business jargons, learn accounting. You need to learn what a share is, what a debenture is, what a mutual fund is, what are earning per shares, what is dividend payout ratio, what is debt equity ratio. You need to understand these business jargons. Then only you will have some information based upon which you will be in a position to make your decisions, make your financial decisions. So the crux is, if you understand the business language, you can communicate or at least participate in the decision making process. So understanding the basis of accounting will help you to be a more educated person, take better financial decision in today's world. I think it's clear as to whether accountancy is a subject worth knowing or not, even for a person who is from a different profession, not related to accounting and finance. Talking about this course, we need to understand as to how this course would be of any use to us. In this course, we plan to understand the basics of accounting. Basics of accounting means the accounting terminologies, the way how we need to record the transactions, the way how we need to summarize these transactions. We need to explore the financial reporting, how we need to report the results of any organization or how the results of any organizations are communicated. We need to master the analysis of the financial statements. Whatever the financial statements are made available to us, we need to make an analysis of this so that we can have some sort of decision making. Then we'll be understanding the managerial accounting part, or the accounting which is useful for the managers or for managerial decision makings. We'll also be developing some practical skills which would be helping in our practical life. So this is how we would be proceeding with this course, right? Now, if you talk about the structure of this class, our classes would be a mixture of lectures, practical exercises, case studies, and discussions. To have an in-depth knowledge of the subject, it's important for you to actively participate and engage in the learning process. Talking about the course material, I would say primarily we would be following this textbook, which is Financial Accounting for Management. It is authored by Dr. N. Ramchandran and Ramkumar Kakani. This is the fifth edition of Tata McGraw-Hill's. I'll also be providing you with the supplementary materials, articles, and real-world examples to enhance your understandings. So let's begin our journey of the accounting or the subject accountancy. So first we need to understand as to what accounting is. For this you need to understand that you have some business transactions. What are business transactions? You buy something, you sell something, you incur some expenses. What you need to do is you need to provide the accounting, or you need to document all these things. So what is accounting? Accounting is the processing of information about the economic entities. Economic entities means those entities which are engaged in the economic activities. Then what accounting does? It measures the results of an organization. What it does? It measures the results of organization. This is done by way of the income statement or the profit and loss account, or through the balance sheet. What we do is we measure the results, or we know the financial position of an organization based upon few financial statements. Then finally what we do, we convey or communicate this information to the variety of stakeholders. Who would be the stakeholders? They could be internal stakeholders like the management, there could be external stakeholders like the government. So what accounting is? It is a processing of information, processing the information in definite manner, measuring the transactions and finding out the results, and then communicating these results to the interested parties or the stakeholders of an organization. Talking about the functions of functions of accounting, we need to understand as to what accounting really does in an organization. It does the functions of planning and controlling. What is planning? Planning is think in advance, to plan. Controlling means finding the outcome and then comparing it with the planned way. To have control over the accounting activities means whatever we have planned and whatever the actual happening is. If whatever things are happening is as per our plans, we would say things are in our control. So this would help you in decision making process. Whether to continue with a particular product, whether to continue with a particular process, whether to continue being in the same market or looking for a different market. Again, accounting would help you in forecasting your budgeted purchases, sales or production. It helps in comparison and evaluation. Again, the comparison is between the planned activities and the actual activities. Then we measure the transactions, we interpret the results, and then we finally communicate this to the accounting users of accounting information. Right? Talking about the functions, again, we would say that accounting is a service function. Basically, it's a service function. What is accounting? It's basically, it provides a service function which is largely advisory in nature. It advises you related to the transactions which have happened. Right. It provides this slide which is shown to you would talk about the transaction, the two types of accounting functions. One is financial accounting and the other one is accounting analysis. Financial accounting relates to recording of the transactions. This is finding or analyzing the transactions. Whatever the results are, based upon that, what you do is you analyze whether the business is running in the way which we have thought of or not. Then accounting is used for reporting purpose. This is basically, here the audience is the outside world and here it is the insiders. So the functions of accounting are two functions. First, we talk about the accounting part and then we talk about the analysis part. Accounting means recording the transactions, generating reports out of that, and then we need to provide this to the outside world. There may be legal frameworks, legal requirements, wherein the income tax department would be asking to you for some information. Similarly, the Companies Act would be having some norms of disclosure for you. So these accounting part is basically related to the audience, which is generally outside the organization. Whereas when it comes to analysis, we talk about the internal participants or the managers and investors. Talking about the evolution of accounting, accounting is as old as human civilization, because as we knew that accounting is nothing but the language of business. So whenever business has started, the accounting has happened or it has started. Right. But the first recorded document related to accounting was by Luca Pacioli. He is an Italian monk, wherein he had written a book in which there was a chapter related to the accounting aspects. So we would say that the documented form of accounting was started in Italy. Right. And they talked about again the benefit and sacrifice, or the cost and benefit aspects. So this book started, or this was based on the benefit and sacrifice principle. So it was evolved, or we would say, by this guy, this monk in Italy. Now what is an accountant? Accountant is basically a historian. What is historian? Historian is a person who keeps the historical documents or historical records. So what we would say is, we would say accounting can be perceived as a historian. Accountant can be perceived as a historian. He's a guy who would keep a track of all the records. But you need to understand that while performing his duty as an accountant, what he needs to do is he need to respect the facts. What is respecting the facts? Which means whatever transactions have happened, he need to vouch for them through vouchers. They should be factual based, right? Every transaction should be followed or should be supported with a document which is called its original document or a voucher. We'll be talking about that in our future classes, right? He need to see that the facts are accurate. He need to bring into focus all the knowable related facts, which means whatever things are known to him, whatever conditions are prevailing, whatever conditions are known to him, he needs to bring them to the knowledge of the users of accounting information. Then finally, he need to provide an interpretation of the history or the documents. Interpretation in the sense whether the business was doing in a proper manner or not, whether there was a profit or loss in the organization during the previous financial year. So this is what interpretation is all about. So what an accountant does as a historian is, he need to keep a track of all the transactions based upon some facts. He need to ensure that these transactions are entered in the accurate manner. Whatever facts are there which were known to him while preparing these financial statements need to be brought to the knowledge of the users of accounting information, which is called as the disclosure norms. And finally, he need to present the interpretation of whatever transactions have happened. Talking about the evolution of accounting, it started with the economic environment. As we know, economic transactions means all those transactions which are involving money or money's worth in that. Say for example, if an employee is coming into an organization or moving out of an organization does not have a monetary impact or economic impact. So we would not term that as an economic transaction in our books of accounts. So the starting of financial accounting happened from the economic environment, which means an environment wherein money would be used as a measuring scale. Then gradually this evolved as a profession. Now you have chartered accountants, now you have MBA finances, you have company secretaries, you have cost and work accountant. You have many persons who are doing this, who are mastering this subject. And industrial revolution has contributed a lot to the development and growth of financial accounting. This, with the changes, earlier it was all manual, and now if we talk about that in the IT era, you have a lot of packages, software packages. The prominent among them would be Tally, which is widely used across the small and medium enterprises. You have Microsoft's Navision, you have SAP, all these accounting packages or these MIS packages. So accounting has evolved since the starting of business transactions. It's as old as the human civilization or the business civilization. Again, when we talk about the development of accounting, earlier accounting was confined only to the bookkeeping activity. What is a bookkeeping activity? You enter the transactions or you record the transactions, you summarize them, or you take it to the place where it is supposed to be. That is the first step wherein the accountancy was started. Then, with the passage of time, there was an agency concept, or the partner had to report to his activities on behalf of the principal or other partners. Again, with the growth and the volume of business, the development of joint stock company or the companies were added to the reporting. Now you have reporting norms for that. Earlier it was not there, or even today in case of individuals you do not have those many strict reporting norms as compared to the companies. Then Slowly you had the entity concept wherein it was said that the organization is distinct from its owners, which means, say for example, if you talk of Tata Steel, it is different from its shareholders, or say Mr. Ratan Tata. These are two different identities. So you have a separate entity concept now. Then we have shifted from a particular venture to the owners. We talk about the equity or equity shares. These are the basic developments in accounting as to from where accounting started and where we are now. Talking about the foundation of accountancy, we would say that basically we had three ideas which had resulted in the foundation of the accounting system. These ideas are capital maintenance, productive capital, and profitable operations. If we talk about capital maintenance, this was the first idea of accounting, which is called as the capital maintenance. The capital maintenance simply says you need to preserve your capital, or you need to preserve your resources which are used to generate the wealth. Now, how do you calculate this? It's very simple. You need to find out what is the capital at the end of the year and capital in the beginning of the capital means the amount which has been invested by the owner or owners in their businesses. You need to find out where we started and where we are now. If we have started with say 50,000 rupees of capital and today we are standing at 100, we would say our capital maintenance was there. So in simple terms we can say it happens when the capital at the end of the year is greater than the capital at the beginning of the year. In simple words, we would say capital is said to be maintained or preserved if your capital today is more than the capital yesterday or in the previous year. The opposite of that would result in capital erosion or negative capital. Reduction in capital. We won't say negative capital because capital is never negative. We would say reduction in the capital. And continuous capital erosion threatens the business survival. Right? So capital maintenance, the idea of capital maintenance says that we need to maintain the capital throughout our business venture. Then we talk about the productive capital, which means wealth to be used to generate further wealth. We had 100 rupees today or 100 crores today. We need to use this in some productive activity which would generate further wealth. 100 has to become 110, 120, 150 like that. So productive capital means you need to use this capital to generate further capital, capital plus X. Here, wealth is used to generate further wealth. What happens is when you generate the wealth with the existing wealth, what happens? You are on a stage of growth, right? So the idea of productive capital says that wealth is to be used to have further wealth. Now, if we consider the example of oil wells which are owned by the oil companies, would that be productive capital? If it does not result any revenue during a particular period, the answer would be no. In order to be productive capital, you need to generate some, you need to be productive, as simple as this. You need to generate some wealth in addition to the wealth which you are already having. Talking about the profitable operations, it's very simple. It talks about we need to engage into those operations, those activities which are profitable in nature. How do you know whether an activity is profitable or not? We say the total amount generated, which is called as the revenue. If it is greater than the costs incurred, we would say that this activity has generated some revenue, or this activity is a profitable activity for the organization. In simple terms, we would say profitable operations means when the productive capital is used On a large scale for economic activities, the idea of profit becomes the motive force. Using money to generate revenue more than the cost. This would motivates you to go in for further consumption. You have a large number of alternates. Diversification happens when you have profitable operations. You need to make choices between different alternatives that you have, right? Then, so these are the basic ideas of capital maintenance. Ideas of profitable operations. So friends, with this we conclude today's class. If we relook into what we have discussed today, we would say we talked about the importance of this subject, which is accountancy. Then we came to know what accounting is. It's basically a process wherein the economic transactions are recorded, result is known, and it is communicated to the users or owners of business. Then we talked about the developments in accounting, and finally we talked about the foundations on which the accounting system is based. So basically we talked about these points in our today's class. In the next class, we will be talking about the different concepts and principles of accounting, the ways, the different types of entities